Thank you for taking a look at the state of the Denver metro housing economy for the second quarter of 2012, provided by the South Metro Denver Realtor Association. Here's the trends we're going to look at: unemployment, housing affordability, home sales, interest rates, foreclosures and short sales, and vacancy rates. As of the second quarter, the unemployment rate in the state of Colorado hovers at about 7.9%. This is up a little bit from the 7.8% of the first quarter and reflects a stable job market, but certainly not a market that's getting significantly better. What we see is unemployment dropping, but dropping slowly. We need that to spike significantly lower to have a real boom in long-term housing needs. The good news is that the home affordability continues to get better and better and better, and this is due to great housing prices in the Metro Denver area on top of spectacular interest rates. Let's take a look at those. Home prices adjusted in 2007 and have remained since then continually rising, but slowly rising. We're not seeing any huge increase, but we do see year over year some slight increase, and in some neighborhoods, some localities, going up significantly. Interest rates continue to be low, hovering at about 3.5% to 4% this year. Spectacular interest rates are available. It's our recommendation that if you haven't refinanced, now's the time to contact your favorite lender and get your place refinanced immediately. For buyers, both investors and first-time buyers, and any buyer, as a matter of fact, terrific rates. The good news about foreclosures is the amount of foreclosure sales are lowering month after month after month, and certainly this second quarter we're seeing a significant lowering of foreclosures in the metro area. The vacancy rates also continue to be very low, making the market very attractive for investors who want to buy properties and turn them into rentals. And given the very low interest rates, they almost all turn great profits right away. When you add to that the owners are able to raise the rent for the first time in a very long time, that they're able to significantly raise the rents, this is a great opportunity for investors to get into the housing market. Active listings are very low, down 40% from a year ago, hovering at 10,500. What that means is a real constraint on the market. And what that shows buyers is that they don't have a tremendous amount of choice and they need to take fast action. On top of that, we see a 24% increase in the amount of sold properties over a year ago, almost 19% increase over just a month ago. And that's excellent news, and we're seeing it throughout all of the real estate industry. Housing is booming in Metro Denver. And then the last piece to that is that the average sold price is up to $284,000. That's a 10% increase over a year ago, although that may not be exactly right. Don't presume an individual house is up 10%. That probably reflects that upper-end properties are starting to kind of sell, and that averaged in with lower properties is what's driving that price. We think that in most neighborhoods the prices are going up, but you have to look at the individual neighborhood and you have to really be sure that you have comparables to support the price that you're putting a house at. We've been really looking at absorption ratios for the past 2 years to try and see the long-term trends. And what you see is that the absorption ratios are going down, down, down from any traditional levels. We take the number of listings, in this case for the quarter, 31,000 listings, and we divide that by the amount of solds, almost 12,000, and we have the lowest absorption ratio we've seen in 20 years. What does that mean for a buyer? It means that they're going to have a tough time finding a house at all. When they do find a house, they're going to have to put great pricing on it. They may have multiple offers, and they may have to overbid on the house. So where are we today? In June 2012, the job market is fairly stable. Foreclosures are down. Prices of homes are increasing. Inventory is drastically low. The rental vacancy rates are at all-time lows, and the absorption ratios continue to drop for the 7th straight quarter in Metro Denver. Here's our issues. Number one, buyers are still listening to national news. It's going to be difficult, and agents are going to have to really work with buyers to readjust their expectations of the marketplace to meet the marketplace of Metro Denver. Denver's not the only place in the country that's experiencing this boom, but the national media just doesn't seem to get it. So what they're seeing is multiple offers on homes. Sometimes they have to bid high on homes, and it's going to take you, the agent, to really help them to understand what market are they getting into. Provide them statistics, provide them information so that they can make informed offers. And then the last point is going to be the difficulty of getting appraisals in this marketplace. Agents are going to need to have good comparables to provide the appraiser if they expect those very high prices. Appraisers are conservative by nature and have been beaten up because of the financial crisis. They're going to be very conservative. It's going to be up to a good agent to make that different. We'd like to thank the National Association of Realtors, MetroList, the Department of Labor, and the Department of Housing for making these statistics possible. Thanks, and have a great quarter.